How much does my business owe in taxes? I am so glad you asked. I'm Dr. Alex Engar, your Profit Doc, and today we're going to look at how much might you owe in taxes and how can you understand taxes at a much deeper level as a business owner. Let's dive in. There are three big things we're going to cover today. First, we're going to look at how the government calculates taxes for you as a business owner. Next, I want to show you how to make sure you never have a surprise tax bill again. Wouldn't that be glorious? And third, I want to give you a very simple way to show you how much you should be saving every single month so that come tax time, you've got it all there right in the bank. All right, so the first thing we need to understand is this concept of finance pants. I want you to imagine that you, as a business owner, are wearing this amazing pair of pants. I actually do have a pair of finance pants. I totally should have worn them today during this video. I've got dollar bills all over it. I just couldn't be quite that cheesy for you. But here are these finance pants. You're a business owner, and each of the two pockets represent your business and personal bank accounts. So I want you to imagine that you make profit in your business, and it's sitting here in your business pocket. And then I want you to imagine you make an owner's distribution or an owner's draw. You transfer money from your business to your personal account, right? So it goes from one pocket into the other. A lot of business owners think that when they make that transfer, that is a taxable event, or that is money that they'll now be taxed on. And that is not the case. Because guess what? You have one pair of financial pants, and it's just two different pockets. So whether the money is sitting in your business account or it's in your personal account, it doesn't matter to the IRS. It is the same pair of finance pants. So now that we understand that, let's look at how we're actually taxed. And the thing is, as a business owner, you pay personal income taxes, not your business. If you are an LLC or an LLC taxed as an S Corp or even a sole proprietor, the income taxes that you pay are actually based on the business profits. So the business isn't paying income taxes in that instance. Instead, you, the individual, are. So if we understand that your business taxes are really just personal taxes, it makes this much simpler. Okay, so let's look at how the government is actually taxing you. We need to go to your profit and loss statement. And we need to understand a couple of things. I want you to pull up a P&L right now and look at this so you can see these numbers for yourself. So let's imagine that we've got your P&L here. Profit and loss statement. If it's an accrual basis P&L, then you're just going to recognize that that's how you're getting taxed. If it's a cash basis P&L, then it looks a little bit more like cash in versus cash out. We're not going to get into accrual versus cash on this one, but it's the same for each business with how you're taxed. At the top, we're going to have revenue coming into the business, right? So here's your revenue or sales coming in. Then we have your cost of goods and expenses. We're just going to summarize that with expenses. And now at the bottom line, they're just going to tell you net income or profit, right? Revenue minus expenses equals profit. So the government is going to say, hey Alex, let me see your profit and loss statement at the end of the year, or at least you're going to give it to your tax advisor, and they're going to report these numbers to the IRS. And the government is going to put a big circle around that profit number, and they're going to say, that is what you get taxed on. Some business owners think that it is their revenue that they're taxed on. Some business owners think that it is the money that they transfer to themselves that they're taxed on. And that is not the case. You are primarily taxed based on the profit in your business. If you're finding this helpful and getting a nice graphic look at how your taxes work is useful, will you just click that like button real quick for me? Awesome. So next, let's look at the three different taxes you pay as an individual and especially as a business owner. Okay, so the government is going to look at your net income at the end of the year. And remember, you, the individual, are paying the taxes, not your business. And there's three different taxes that you're paying, okay? First, we're paying federal income taxes. These are the tax brackets that everyone knows about. You know, there's the 10% tax bracket. There's tax brackets going on up. The more money we make, the higher the tax bracket our money lands in. The second one is state income taxes. Not every state has income taxes, but you can look up the rate for your state online, and it's usually a pretty flat-based tax, okay? It's often less than federal income taxes, unless you're in California or states like Massachusetts where it can get really expensive. Next, self-employment tax. As an individual, if you were to go get a 1099 job and work for someone else but not as an employee, then you would definitely be paying these self-employment taxes. Within our tax workshop, we get a lot deeper into this, but just understand it's about 15.3% of your profit at the end of the year. Each of these add up to you paying a fair bit in taxes. So how much should you be saving? The rule of thumb is look at your profit at the end of every month and save 30%. If you default to saving 30% of your profit, you'll likely be saving enough to pay both federal, state, and self-employment taxes throughout the entire year. Now, there are a lot of things that you can do to reduce that tax burden. There are great tax write-offs, but I'll just tell you the whole goal of your business is not to break even from a profit standpoint. That is terrible tax advice. Instead, we want to make as much profit as we can and deal with taxes later with good tax strategy. So my biggest piece of advice through all of this is, number one, get a great CPA who can talk through these concepts with you, save that 30% every single month, and then check in with your CPA maybe every quarter, maybe twice a year, but definitely when it comes tax time, because they can give you the advice on how to make sure you're saving the most possible. And then finally, if you feel like your profit goes up and down every single month, and some months you have really high profit, some months you might have a net loss, and it's really hard to save every single month, you might be able to condense that and just look at your profit on a quarterly basis and save quarterly instead of monthly. All right, if you found this useful and you want to go an entire level deeper, then we're giving you a free gift below in the description. Click that link down there and we'll send you to our deep dive tax training, where we give you our top 10 tax mistakes that people often make and how you can avoid them, along with the strategies that we use to make sure we're not paying as much in taxes. You can often pay far less than 30% of your profit, and we're going to give you some of our best strategies for that when you click the link below. Thanks for watching the video, and we'll see you on the next one.